Hey everybody, it's Zen here from Prime Properties TL, and I am back from vacation, and I've been monitoring all this crazy shenanigans that's been happening in the election and what's happening with inflation and what's happening in China with Evergrande, and I've been taking notes. I was thinking critically about what's happening, and I want to compress all of this into this month's podcast for you. Now, you may agree with me, you may not disagree with me, but the whole point is my philosophy and thesis on how the real estate market changes mixed with other stuff around it. But the more I dive into this stuff and what's happening around the world and understanding economics, more of it, and just how politics work out, the more I'm just oh man, I should just buy more real estate. And you don't have to agree with me, but you can just see my take on all of this. And if it makes sense to you, then hey, you may be oh my God, that is right. Or if you think I am just some realtor trying to sell you something, snake oil, whatever, that's your decision. You can rip me on the YouTube comments. But at the end of the day, if you found this helpful and you want to have a chat about real estate, you can book a call with me using www.chatwithzen.com. It's on the screen. But otherwise, I hope you enjoy my talk about what my thinking is in the last 3 weeks of being on vacation and watching all this thing go down. I think I go on, I was looking at for about almost an hour. So brace yourself. I go from talking about all the liberal points in terms of what's going to happen now that they have a minority government, that I talk about how all this inflation has impacted, and from the pandemic side, and I also touch a little bit about Evergrande stuff that happened. So hope you enjoy this episode of the Prime Properties Podcast. Good day, Toronto. Welcome to this month's episode of the Prime Properties TL podcast. So, join me here. I'm a little bit darker, just came back from vacation, but I've been following what the heck has been happening on in the whole election scenario. And I personally don't want to make too many comments on what's happening in the election because personally, I know nothing ever amounts to this. I've been following it for a couple elections since I've been investing in real estate since 2008, I think, when Harper was elected. And every time someone promises you something, it never gets done. And understanding how all this, I always tell my clients, look, no matter who is pandering for your votes or who is lobbying for your votes, at the end of the day, I really don't think it matters. And that's why I purposely didn't want to do anything or kind of to sway any votes or make my comments because, yes, I voted, but at the same time, it's not like it's going to make any difference because at the end of the day, for anyone who's listening to this, I know you're real estate investors, and it really won't matter. So the purpose of this is I'm going to now go into detail about the liberal housing plan because they got a minority government, and I'll just go over, from my perspective, why none of this will make any difference to you and why you probably shouldn't freak out, right? And then I'll probably talk about a little bit about how Trudeau's government and inflation and also some of this Evergrande stuff that's happening because a lot of people have been reaching out to me to kind of ask me about my opinion on it, right? So I figured I'd share with all of you. And again, all of this is just my opinions, and this is how I perceive the market and why I'm just generally not too concerned about all this foo-foo. But a lot of the times people are concerned about it. So I just want to give you my perspective, and you can take with it as what you will, and hopefully, helps you make an educated decision. Because again, that's all I'm basically trying to do, right? So if you're trying to reach out to me and you agree with my perspective or you don't, and you want to have a chat about something, whether it's about real estate related or you want to find a property after hearing me oh, Zen, I should buy more properties, then you can reach out to me. I'll put a link here on the screen. It's www.chatwithzen.com. But otherwise, you can find a lot of my stuff in different videos and kind of my takes on what's happening because a lot is happening right now. But at the same time, everything that's happening is not going to amount to much, is my opinion, right? So I'm going to shrink myself here, and I have some of the numbers opened up for so not numbers, the housing policy, right? So I took this from Move Smartly's account, and I'm gonna go through each and every single line item. If it's a very quick one, I'm just gonna just say, yeah, that's fine, whatever, not a big deal. But I will kind of expand on kind of some of the larger ticket items, right? So I'm going to the first one. So their plans. They're planning to invest $4 billion into new housing accelerator. Look, they said this, I think, in 2017 or 2019, whatever, when the last time Trudeau won minority, right? That was their platform. I talked about it before. They've created some housing. I know they've created some apartment buildings in Brampton and some in different pockets of Canada as well. But at the end of the day, it doesn't amount to anything, and it actually doesn't affect the market too much for anyone who's listening to this because the affordable housing is really meant for people subsidized housing, social needs kind of housing. It's not meant for you who is having a hard time buying a house, right? So be very clear on that. And $4 billion, while it sounds like a lot, I don't know how many houses that actually is going to come from it, right? Then you got the $1 billion for loans and grants to rent to own. My whole thing on all these fancy foo-foo programs are generally they're made to sound good, but they never amount to anything. Kind of the whole, they're going to take 5% of your property and they help you with the down payment, lend it to you, and you have to sell it back to them, right? I think this was in 2017. Not many people took them up on that, right? So what this rent to own is, you can learn about it if you want, but basically maybe the federal government's going to buy it for you, and then you pay them an advanced amount of rent, and then you can own it afterwards. I don't know what the program is, but I really don't think a lot of people will be taking a part of it, and unless like it's a really, really good program, which I highly doubt it will. Then you got National Housing Co-Investment Fund to affordable housing. Again, affordable housing has nothing to do with you guys. It's for people who really, really need it. And I know from hearing other people that the Toronto housing company, like there's like an 8-year wait for housing. So I think that's what they're dedicating their things for, right? So it's not to you, the real estate investor, the person to buy the home. It's really for people who are trying to just have a home. Totally different context of affordability, right? Then there's indigenous stuff. I'm not going to comment on it. So now we're going to talk about renting. So now we're going to say that we have to report the rents. That's fine. I'm going to talk about this later on. I have some notes on the right-hand side, but like basically it's going to be, I think we're going to be very governed by the way us as landlords and people can actually charge rents. And I think this is probably the first phase of it because they don't want the rent hikes to be too high. Like I know when you're under rent control, you're going to be capped at a certain amount, right? But if you're not, you can do whatever. But I think they're going to try to target that, right? So that's coming down the pipeline, I think like 5-10 years, just because I see it in like different cities as well. But I think that's kind of what this is going to lean towards. Then you got expanding an upcoming vacant tax. Like, look, my whole thing about the vacant tax for like non-residents and whatever, like it's so easy. Why not? If you have so much money, the only reason you're leaving it vacant is because you just don't want to deal with tenants because it's just headaches, right? So if you can easily deal with it by putting a tenant in there and they're just paying for property management because you have too much money, right? Like it's foo-foo. Again, it's foo-foo. They're going to say it amounts to a lot of tax revenue, whatever, but it's not going to take or add any supply that's substantial enough to change the market. Again, little minor like trims around the edges, which is kind of basically what the government plan is. Then you got enable current renters and landlords, particularly in condos, to immediately enter. Okay, again, talked about rent to own already. Commit another $1 billion. That's fine, whatever. Okay. So you got buyer protection plan. This one's interesting. Everybody in that's a realtor is going to complain, but look, I don't care at the end of the day, right? Like it's just our jobs probably change a little bit, which is fine, right? The whole thing about this rule is convene federal provincial regulators to develop a national plan to protect consumers, transparency, transparency. This is the whole blind bidding thing, right? So if they want to change and remove blind bidding, fine. I don't care. That really doesn't matter, right? Like if we are to disclose everything, I think like an auction style, like Australia, where everyone talks about, the prices haven't changed there. Like, yes, you change the way your real estate spot, but it doesn't change the buy and supply and demand, right? Like you may prevent that one person from overpaying on something, but it's not going to change everything else, right? So I think while realtors are kind of like, up in shock about it, like I really don't think it makes any difference whether there's blind bidding or not. The market will adapt to it, right? And if there's not enough housing, prices are gonna go up. My concern is like if you got a bunch of people landing outside, when COVID's over and stuff, then are you gonna have a bunch of people raising their hand like, you 10,000, you another 10,000, oh, are you gonna have one of those things? And like when you get really heated in the step of things, they also gotta think about like, are there conditions? How do you prevent you showing whether they have conditions or not? Like I don't really know. It's not been kind of flushed out enough to what it's going to be, but I'm not opposed to it, but like I don't think it's going to make a difference, right? So it's just kind of like the next kind of headline story people want to talk about, and that's really I think all it is. And again, back to what I was saying, they're pandering for votes because you think they are going to get you by like get your votes by appeasing to what you want, but as you think about it at the end of the day, it makes no difference, right? So then you got established right to a home inspection. Cool. I think that's great, right? Like, I think if you're forced to do a home inspection, that's great. But if people don't want to do one and there's no conditions, that's fine. But if you force one on somebody to do it, that's also fine too. Because sometimes when we prepare a listing, we're like, okay, you know what? This house looks great. Let's just get the home inspection done, right? I think what this will probably be good for is like if the house is kind of like a piece of crap, or maybe there's something hiding underneath of it, you can force everyone to do a home inspection, right? But then again, like you have to keep in mind, like home inspections don't like show everything. Like if you have a foundation crack or something behind the wall, like a home inspection is visual only. You can't see what's behind the wall. So like if like kind of the important mechanical stuff actually has an issue, it's not going to show up in home inspection, right? So again, I don't know how they're going to govern this, but I think it's a good idea. But is it going to make a difference? I don't know. This one kind of worries me a little bit. So you got insure banks and lenders offer 6 months mortgage deferrals on the event of job loss. This is basically saying, hey, look, if another pandemic situation happens again, like, hey, we'll give you 6 months deferral easy. My whole take on this is like the minute they announced the mortgage deferral because it works so effectively is if something were to happen again, easy peasy, they're going to implement that right away, just freeze all the repayments, right? And if you're going to put this for employment loss, you're basically just kind of like wrapping a person financially in bubble wrap to prevent them from kind of like, messing up and going into bankruptcy. Like if you're not responsible or have a little bit of savings at the end, that's on you, right? But if they're going to put it in, sure, whatever. But is there going to be less people needing to sell? Like people say, oh, let's increase interest rates. I think the answer is going to be no, because if they implement this and say like interest rates go up and lose their job or whatever, they're going to be like, okay, I'm going to implement this 6 months and try to find something. Then they're not in need of sell, which is going to, again, restrict supply, right? So you got to think critically about what the kind of first principle effects of what's going to happen, right? Then you got to require mortgage lenders to fully, that's fine, whatever, first time home buyer, so that's fine. Nothing to pass on it. All right, this is my favorite. Everyone's going to talk about speculative and money laundering. If anyone's read the book Willful Blindness, it's pretty good. You should go check it out by Sam Cooper. It talks about basically all the money laundering. It's too late. Let's just leave it at that. But they're saying that, they're going to ban foreign buyers for 2 years. Cool, that's fine. We always talked about like when they put in the 15% non-resident speculation tax in our ST. I was like, look, I already know people from Hong Kong who are kind of Canadian citizens and they're buying stuff. It's irrelevant, right? If you're afraid of the Hong Kong money. Then you talk about China money, right? Like you can't dual citizenship there. But I already know a lot of people who are just like, hey, I'm going to send my kid here. They open a corporation, they buy under the name, cash. Right? Like how are you going to enforce it is more important than how you are going to say, I'm going to ban it, right? Because there are always going to be ways around. Like money is like flow of water. It's going to go through all the rocks and through the crevices. It will get to the ocean regardlessly. It's the same thing with money. If there's yield at the end, something's going to happen. So while I think it's a great idea and I applaud them for doing it, my whole take is I don't think they're going to do it correctly, just like the 15% non-speculation tax. Like unless they like really track all the corporations and who owns what and bring it all the way back to the originator of where the money came from, it's not going to work, right? You got an anti-flipping tax. Okay, cool. I think that's great. If you implement it, and if you do implement it, fantastic. You don't have people flipping. Like my issue is like a lot of people who are flipping, they're actually adding value and they're selling it. But if you're going to delay it so much, then like maybe people won't do it and there won't be new houses. And then you have people who maybe need to move for like certain reasons and may have to sell their house. Are you going to penalize them? Like who is the one that's monitoring all of this stuff is my other thing on this, right? Like I think it's a great idea, right? Because people think like they bought something, the market went up and now they're selling it because they're opportunistic, right? I think that's what they're trying to prevent. But if it gets in the way of people like actual good flippers flipping and putting market like properties on the market, kind of like some of our clients who buy houses, turn into 2 units and they sell it back over, if it prevents that, it's going to reduce supply as well, right? So that's kind of what I'm kind of concerned about. But if this is kind of anything like the way they monitor it with like what's it called, like the CRA stuff, kind of like whether you're going to get audited. I know it's really up to the person who's in power making that decision call, right? So I'm not too sure how they're going to monitor it, but I think it's a good thing. But is it going to affect the market? Again, no, right? The other thing I was going to mention, that you have to remember, like I'm not a political guy, but like the liberals have a minority government, which means that for them to implement any new rules, they need somebody to agree with them to have enough seats to actually pass the legislation, right? So I don't know if it's NDP or liberals. I never really looked up numbers. I know at the end of the day, the numbers are like the same thing. But they're going to need support from another party to actually implement this, right? So don't take this with a guarantee that it's going to happen. These are things they're planning, right? Because the planning doesn't mean it's going to happen. Saying that, I'm going to make $100 million this year isn't saying that I'm going to do it. I plan to make it. Am I going to get there? I don't know, right? So now the other thing, establish publicly accessible beneficiary ownership. Great. That's kind of what we talked about. Have some who like the bottom line of who owns the property. We'll see how they do it. If they do that, if they do it correctly, then it's probably good for banning the foreign ownership. You got establish Canada financial crime. Cool, whatever. I don't know what that is. It's just more government jobs, whatever. Increase power of federal regulators to respond to housing price fluctuation and ensure a more stable market. I have no idea what that means. How are they going to respond? Is there someone in power? I thought it was CMHC. I thought it was TIF. I thought there was Adam Vaughan, who was head of secretary. I don't even know what the whole thing is, but like, cool, good on them, whatever. All right, so this is where it gets interesting. First-time homebuyers, right? I think while a lot of people were upset that housing is unaffordable, which is generally, I think, in the major metro cities like Quebec, Calgary, not even Calgary, like Quebec, maybe a little bit of Montreal, you got Toronto and you got Vancouver, right? But they haven't really said anything that's going to help with the pricing. But what they're ultimately trying to do is they're trying to make sure that people who own houses, which is like 60% of the population, they're not losing their money in the houses, but at the same time, they're trying to cater and pander to the first-time homebuyers who can't get in, right? So you see, they're kind of conflicting on both sides. Like, how do you help first-time homebuyers while also making sure that the homeowners aren't losing money. The only way for first-time homebuyers to get in is for the prices to come down. And no one ever talks about, let's make the price of homes come down. They always talk about trimming around the edges, like, oh, let's do this benefit, let's have this tax credit, blah, 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 right? I've seen this for 10 years. Like, they found nothing, right? So take that into your mind when I'm talking about this, right? So you're going to add a first-time homebuyer incentive shared equity program. I swear they did this already as a payback on loan. So maybe they're just upping it. I don't know. I know they upped it to like 720 or 740 for the last one, and it kind of made a difference, but really just for condos. So you can't even touch a house because a house in both the Metro Toronto and Metro Vancouver is like $1 million. So whatever. Okay, cool. Introduce a tax-free home savings for 40 grand. So I think this one I looked into a little bit. It's like saying that you can put $40,000 of pre-tax money. So if you make 100 grand, so 40 grand a year, you can put that 40 grand into that account using for your home without actually having to pay taxes on it, which is the same thing as using the RRSP, right? You put money in the RRSP, you take it out on closing, and you can use it. And I think the limit is 35 grand. So now you can have $75,000 of unsheltered money being used. But here's my thing. Everybody I talk to who's like under 30, they don't even have their RRSP maxed out. So you're introducing another tax savings plan on someone who hasn't maxed out a previous one already. So again, pandering foo-foo, doubling the first-time home buyer credit to about 10 grand. Look, that thing sounds great, but it gets reduced and reduced. I think it's like 750. So if you double it, you get $1,500 back. Cool. Is it going to make or break the market? No, but cool. Thanks. Insure Bank offers under deferrals up to, okay, that's fine. We talked about it. Reduce price charged by CMHC on mortgage insurance by 25%. So that means anyone with under 20% down payment, they're going to reduce the mortgage insurance, which is fine, right? But there's going to be a pass off to someone else. Someone's going to have to pay for that, right? Are they going to pay for it on the non-insured, or mortgage insurance going to go up that way? Because if you reduce the borrowing cost by like a quarter point and everyone can buy a little bit more, right? Say they maybe can buy another like 2-3%, that's going to drive demand, drive prices up. And even if it's just for first-time home buyers, it helps them, but it doesn't help the market and the prices coming down, right? So again, when you, trim around the edges, unless you fix the root problem of Toronto's real estate market, the Canadian real estate market, and specifically Toronto where we operate, is supply, and the money being too much of it, printing, you're not going to fix the problem. You're just trimming around the edges to make it sound good, right? And I'm going to touch more about that a little bit later. Then you got your increase the insured mortgage cutoff to $1.5 million. So what this basically means is like anyone who has less than 20% down, they can only buy something that's sub $1 million, because the minute you go to $1 million, you need 20% down regardless. So if you have less than 20%, you can only buy up to a maximum of $999, right? So if they're going to change that to now $124,999, right? Yeah. So you're upping it by $250,000, which is great. I think it helps, right? Because at 1.25, you can probably still get like a semi or in a town in like York region, almost a detached, because it's like 1.3 now. So that definitely helps. I like that one. I like that. But again, adds more to the demand side. So that's why single family homes, entry level homes have always gone up price, because they're a little bit recession proof, because everyone ultimately needs a roof, right? So that's why we tell our clients to buy those stuff. Require mortgage lenders to, yeah, that's fine. Okay. All right. Taxation. We talked about the 40%. That's repeated. Doubling that. We talked about that. This multi-generational home renovation tax credit, 50. I don't know how that's going to come up, but like 50 grand for helping renovation is fine. It sounds like they're probably encouraging multi-generational stuff, which you see a lot of in like the Southeast Asian community, where you have like even Chinese communities, like you got the grandma, the dad, and the kids all living in the same family in the same house. So you have like 4 or 5 bedrooms. They're bigger houses, but you have like 4 or 5 people contributing to the house, right? So that's been normal in like Asia and India and stuff. So I'm not too concerned about it. 50 grand. I don't know what 50 grand is going to get you in renovations. Let's be real, right? If you want a nice kitchen, it's not going to cost you. It's going to cost you more than 50 grand. Maybe we'll finish like half a basement. The anti-flipping tax, yeah, we talked about that. Expand upcoming, yeah, we talked about that. Reviewing tax treatment of large corporate owners on housing. Well, it's kind of vague. I can't really talk about that. And then there's the homelessness stuff, right? So that in a nutshell is all the things that are coming down the pipeline. I really don't think there's going to be anything too substantial that's going to kind of like make or break what's going to happen with the market that they're coming on, what the Liberals are planning to do. Like at the end of the day, like unless they're planning to remove the red tape and also kind of like increase the amount of housing that's going to be available, I don't think we're going to fix the crisis, because I'm going to go into, I have some charts for you later, but like at the end of this day, it's, you have 400,000 people coming in, you're building 150,000 houses in Canada, you have a housing problem, period. Right? It's that simple. So I'm going to show you a very, very interesting chart. I think it was also from Move Smartly. Um, it's basically a chart. So again, sorry if anyone who's listening to this via podcast that you can't see this, but it's basically a chart comparing how much prices have gone up under Justin Trudeau's watch versus Stephen Harper. So I think Trudeau was elected in 2015, and you can see in here on this chart, and if you're listening, I'm going to describe it to you. Basically, under Harper's watch, which I think he was in power for like about almost 8 years, two terms. So the average price was going up 6% a year, which, by the way, is the average in the Toronto real estate board for the last 42 years. 6% is average. That's why I always like to use 6%. And if I want to be conservative, I use 3. Under Justin Trudeau's watch, since he's been elected in 2015, the average home prices have gone up 11% a year. 11% a year. He's been in power for 5 years now, right? Almost 6. So without compounding it, that's 66%. That means if you bought a place for $500,000, it is most definitely worth over $800,000 now. And that is under Justin Trudeau's regulation. So I always found that interesting when someone, I looked at that, I'm like, that's very, very interesting. Because I think a lot of it comes down to, yes, maybe he's printing too much money or spending too much. But like when you look at it at the end of the day, I think the Liberals are more likely to spend than to kind of be like austerity, which is like save money and pay down the debt. So by understanding how the economics of the money system works is like they're using money to get out of debt by making today's money look like less money by making more money of it in the future. Now, let me repeat that in case it doesn't make sense. If you borrow $1 today, right? And if they keep making the value of money go down by printing more of it, that means $1 in the future in say 10 years is not worth what the $1 is today. And you're paying it back with that future money, right? Say that maybe dollar is worth 50 cents. So now that dollar is paying back today's money and you would have paid it back fully, but in the future it's only worth 50 cents, which is what happened with housing, right? Because if you buy something for $500,000, you max yourself out, go to the limit. But now if you have that $500,000 house that's, say you owe it $500,000, right? But if you're paying back with today's money and that $500,000 would have been worth $250 back then, adjusted for inflation, now you're paying back with future money that's worth less, but you would have owned that asset, right? And that's how there's a huge wealth gap. Anyone who owns asset is at the beneficiary of inflation, whereas those who don't own asset is having their money whittled down and be worth less and less and less because your wages haven't gone up as high as some of this inflation, right? And that's kind of this wealth gap that's happening over and over really quickly, right? So, with inflation, you have to really watch out for how much they're actually projecting, right? I talked about this many times in different videos about like the consumer price index, which is like a basket of goods. I have it over here. The basket of goods, I think, has the highest increase since like 2003 or 2008, something like that, at 4.1%. So the Government Canada mandate is like 2%, and you can see, and this is a what is this? Global News, right? So this was September 15th, like a week ago. So it's at the highest ever, and if 4.1%, what that means to you is basically every dollar you have, it's becoming worth less 4.1% every single year. So if you have $1, it's now worth 97.9 cents in a year's time. So that's how quickly things are being whittled down. So when I tell clients, should you be investing it? Yes, you have to be investing it, because if you put your money into a GIC, right, and let's just say it gets you 1%, right? That means you're gaining 1% on your dollar, but then every single year you're losing 4.1%. So you're still negative 3.1%. And that's kind of the root cause of why assets such as real estate, stocks and stuff, they're all overvalued right now, because the yields, like the percentage that you're being given back in a quote unquote safe investment, is getting lower and lower because the inflation is getting higher and higher. So now they're chasing riskier assets that have more yield than what the inflation rate is. So for your money to even make back what it's worth, like to keep its value, your money has to do at least minimum 4.1% every single year just to stay the way it is, right? And then I've gone about this again, CPI, like it's a really messed up number, because CPI, they can swap stuff out. Like you can go from chicken to ground beef, steak to ground beef on beef. Like you can go chicken to like hot dogs, whatever, right? Like you can swap it out, right? And they also use this replacement cost for housing, which is not like how much the house is actually worth. It's how much your monthly payment is worth or paying. So when your monthly payment is the same when your monthly interest is lower, monthly mortgage payment is lower, which includes the interest component, is lower, your CPI never actually went up, but the value of the house has gone up because the cost to borrow has gone less, right? So that's why interest rates are tied to real estate prices, because whenever interest rates come down, you're going to have ability to borrow more money because it costs less to borrow, so you can buy a more house, right? The problem with this, and circling back to this, is those who have the ability to access credit, meaning access these mortgages, are able to get these real estate assets or stocks or whatever, while those who don't have good credit or good incomes to access these mortgages are left out. And they're left chasing these people who own assets. So a person who owns asset has the asset going with inflation, if not more, whereas the person who doesn't have the asset has to chase inflation. You see what I mean? And that's where, when you have an asset, and this is why I keep telling people, just get in the market. Just get in the market, because when your asset goes up, you can refinance, you can trade it. But if you don't get into the market and you're constantly trading your time for money and not having an asset go up in price, you need your income to increase substantially for you to continue buying these things, because you're not on the asset ladder. And that's how the wealth gap keeps happening, right? So here's a kind of like a very interesting thing, right? You know, like we say inflation and all that stuff, and there was this whole like rent control thing where you can't increase past inflation. Here's where I am going to call baloney on the government actually giving a rat's bum about anything, okay? So if inflation is 4.1%, do you know what they came out for maximum rent increase in 2022? So basically, like, 2020 and 2021, we couldn't increase rent. There's a complete moratorium on Ontario for freezing rents, right? And the one before that, before the pandemic, was like 1.9% or 1.8%. So they just released this in like summertime of what the maximum rent increase is. So I'm going to read this for you verbatim, but if you're watching this, you can see this, okay? Based on the Ontario Consumer Price Index, which I just showed you was up 4.1% in August, okay? Keep in mind this was out in June, but whatever. Well, I think it was like 3 point something. The guideline on rent increases for 2022 in Ontario is 1.2%. The CPI is a measure of inflation calculated monthly by Statistics Canada using data that reflects economic conditions over the past years. BS. If they just said inflation is 4%, yes, I know you're putting in baskets of good and all that stuff. Are you telling me housing costs has only gone up 1.2% and you can only increase rents by that much? Right? It just makes no sense, right? Like, they're talking with their mouth and they're doing the wrong things, other words, right? So if I look at this, like, they're basically saying, hey, you know what? Like, landlords, you already have enough money. We're capping how much rent you can increase. You got to watch it for the tenants. I have no issue with that, right? But like, you can't talk one thing and do another thing and pander for votes, right? And this is why I keep coming back to this whole election thing and all the media has. Like, if you don't think critically what the heck is happening, like, all of this is just foo-foo. It means nothing. And that's why when people tell me or they sort of ask me about my opinion about like the elections or like the liberals, or will this come down to happen? I'm like, nothing's going to happen. Root cause, supply, maybe too much money, right? So that's kind of the things I want to get to you. Now, I'm going to show you an additional chart. Again, sorry if you're listening to this, it's very chart heavy. So we have a chart here from Steve Saretsky talking about like the annual home price index in Canada, right? So you can see that this chart is constantly above the zero line ever since 2008, right? So we dipped down a little bit in 2008, which were semi-affected by the global crisis from like the subprime mortgage in US. But ever since 08, it's kind of been like up quite a bit, right? The fact that it comes down doesn't mean the prices are coming down. It's just the rate of change, which is acceleration or deceleration, right? So as long as they're above zero, prices are still going up. Because if you're above the zero line, prices are going up 1 or 2%. But you can see here, there's this 10% line here. And a lot of this in the last little bit has been above the 10% line, which is scary because if a house in all of Canada is going up 10%, how are we going to look at this metric, right? Like, are prices going up too high, or are we just trimming around the edges to make sure that people can still buy stuff while a lot of people are using the real estate kind of like investors as a financial asset and it's ruling prevalent? And that's kind of the big kind of like, I think, talking point for a lot of people. Like, people want to get into the market, but they can't because there's not enough stuff to buy, but prices keep going up, right? So they keep trimming stuff around the edges. And when they keep trimming stuff around the edges while fixing the supply, the prices continually go up, right? So that's what I'm saying. Like, you got to watch out for some of these things and what they're actually talking about to make sure you understand when you're looking at these things to not impact the way you make a decision, right? Because, like, when we're talking about how they're pandering vote, like, I have another good chart here, which is like the average equity of how much someone has, right? If you look at this chart, ever since, like, say, 2010, the average equity has been minimum 72%. 72%. This means that the amount of the home you own is at least 72%. So if prices were to even come crashing down, people have so much equity in it that they're okay. They're not going to have to be forced to sell. The people who are forced to sell are people who are over leveraged. Maybe they have too little equity in the house, or maybe they can't afford the payments, or in an investor's case, maybe they're cash flow negative and they can't make the payments anymore, right? But if you own 72% of the equity, there is in no way, shape, or form that you are going to let go of your house and it's going to crash, right? Even if they change the interest rates, right? Like, you think about it. If you have $1 million home on average right now, say if prices crash 30% and you're at 700%, if you still take, again, this is very simple math for this, but like if you take 72% of that equity, that's still a few $100,000 you're not going to let go of. So you're going to do everything in your power to actually hold on to that asset, right? And because home ownership and equity is so high, it's a lot of people's retirement home. This is exactly why the government will always pander to people who own the homes, because those who own the homes, they're in their kind of riding in the seats. They want to make sure they get their vote, right? So they're not going to ultimately pander to people who aren't in the ridings, because there's more of the people who own a home with high equity and they're not going to let that stuff crash. So that's why they trim around the edges for the first-time home buyers. And the first-time home buyers are the ones that are kind of trying to listen to what, some of these people are, pandering to them for. Whether they believe it or not, that's up to that person, right? And when you break this out into age of equity, how much equity each person owns, I was actually quite surprised when I looked at this, because those who are under 35 actually have like 50% equity. Now, this could be like down payment gifted from parents, or maybe they're just smart with the money, or equity also comes from the fact that you bought a while ago and your prices have gone up and you paid down your mortgage, right? So that change in percentage increases your equity, right? But you can look, like the 65 people basically have 100% equity most of the time, and it just keeps increasing, which are the people who ultimately kind of have the most, like I'd say in a vote, and that's who they pander to. Like, I think when I was looking at the chart of where like Toronto and Vancouver was voting, like most of it was blue anyways, which is conservative. So like they maybe, from talking to people my age, like they're already kind of sick of the liberals and don't believe in them, but ultimately in the nationwide, right, like it's still a liberal minority. And when you talk about all this kind of like money inflating and prices going up and people equity, like everyone's so focused on like, oh, it's a Toronto event. It's not a global event, but it is a global event, right? Like if you look at the chart, again, I apologize you're listening to on the thing, right? Like I'm going to list down all the cities, but like ever since 1995, the amount of housing affordability, which they're measuring this as like a price to income ratio, which again, I've talked about, I don't like this metric because it's absolutely skewed, because sometimes the houses are low, but then the incomes are high. So you're not beyond this, but sometimes the prices are really high, but incomes are still really high, right? So this is like a Hong Kong, which is why I think Hong Kong is not on here. So, but just as an example, like Sweden, UK, and New Zealand is really high up there, and Canada is 1, 2, 3, 4, 5, 6, 7, 8. So like we're number 8 or 9, right, by my count. So Canada is quite bad, but it's not a global phenomenon. Sorry, it is a global phenomenon in the sense that it's happening everywhere. And a lot of this has to do with the fact that all the central banks are reducing their interest rates, which means that people are chasing more yields, which means that they put stuff into more risky assets. And at this point, real estate, even though to me, it's not a risky asset, it's deemed risky from like hedge funds, and now they're getting into it. This is why like the BlackRocks and the core developers are coming after housing, because rents are a hedge against inflation, right? And if you ask me kind of like where all this is heading, if you look at like London and other bigger cities, what's going to happen is when you have the ability to buy a home, everyone's going to buy a home. But once that kind of phase passes, which like, we've been saying it's the ultimate land grab in the next 5-10 years, you got that little period of time. And when that's over, everyone's going to rent. Because when you go to London, everyone's renting a flat. When you're going to Asia, everyone's renting. No one's thinking about buying a downtown condo anymore. Like it just doesn't exist, right? The prices get too high. They become unaffordable. And based on these like price to income ratio, it's too high and it just gets passed on from generation to generation, right? That's what's going to happen. But what's going to happen after that is they're still going to continue trying to trim around the edges and make it so that people are still able to buy things. And what I think is going to happen is they're going to probably maybe make it for first-time home buyers to increase their amortization from 25 years to 30, and then go from 30 to 35. Because every time you increase about 5 years in amortization, you can probably buy another like 10 to 20%, depending on what the interest rate is, right? So that allows the home buyers to get into the market. And then when you do it again, you can go to 40. Because like when we got started, it was 08, and you could do 0% down 40-year amortization, right? So it's not about how much an asset is worth, because if you just keep playing and trimming around the edges, kind of like changing interest rates, changing amortization, changing policy, changing stress tests, you're going to just affect how much someone qualifies for. And when you have the government pandering to these things and helping certain demographics, which is like a behavior type of way, those people are going to benefit. But ultimately, it's not going to make anything cheaper. It's just going to give those people an opportunity to buy. Because if you think about it, someone who's able to buy at a 35-year amortization because they just make it, the next group of people who can't buy at 35, they're going to complain. And then you move it to 40 and so on and so on. And therefore, the prices keep increasing. And when you're in the market and you have an asset, you just go, you ride this wave and you're okay. And you can always trade between it. And that's why I keep saying, just get in the market. But if you don't get in the market, at some point, it's going to become completely unaffordable. Prices could be like $4 million, but your monthly amount could be like $3,000 because you stretch your mortgage for like 50 years, right? Like I think, is it Switzerland or Sweden that has like 99-year amortization, right? So when your monthly payment is all you care about, that's fine, because that's the type of world we're in. I think some politician was saying like, the millennials are in this kind of like, you never own anything and you'll be happy kind of lifestyle, right? Like you think about it, that is the models that our life is going to. It's a subscription model. You got your Netflix subscription, your Spotify subscription, you pay for rent, which is a type of subscription, right? Instead of buying a car, you lease a car, right? You will own nothing and you'll be happy. And that's kind of what I think we're heading towards. The idea of ownership is going to be over, right? So that's why I've always been like, look, I've seen other cities, mega cities, big cities, whatever we're talking about, where the population is so much bigger than Toronto, right? And it's become that way already, right? And after that, I think the government, to prevent people from being homeless, they're going to cap the rent, right? So they're going to put rent control on everything. So that's kind of where like you have New York, where people can't even, like they go into a place and they stay there forever and they transfer the lease over and over again so that the rents stay really, really low as rent prices go up and a lack of supply. So it becomes a situation where everyone's stuck where they are, and then people who are left holding the assets are the ones who end up winning. And that's a wealth inequality that I think we're heading down towards, because no one's going to be ballsy enough in the government to be like, you know what, shut all this down. We're letting everything blow up. No bailouts, no nothing, right? Like we had a chance during the pandemic. We're not doing it. And no government, because they constantly want to get reelected, is going to have the balls to do it. So I think we're going to go into this giant debt spiral, and that's kind of where we're headed. That's why I keep doubling down on real estate prices, right? Or sorry, real estate portfolio, because I know that it's going to be very difficult for most people to own something already. And it sounds very self-serving because, like, obviously I own a real estate brokerage, and if you buy stuff, we get paid. Like, look, it doesn't matter to me whether you buy something with me or not. Just at the end of the day, if you're trying to get ahead and you want to own something and the idea of ownership, just get in the market. Just get in the market. Like, I think I was talking to one of my clients earlier. Like, if you can't afford where you're buying, where you live right now, or like say you're renting and you want to own downtown, go buy in a small market. Go to Peterborough, go to Belleville, go to like Aurelia, go to Sudbury, go to London, go to St. Thomas, whatever. Go buy something there where it's cheaper, rent it out, and just find and cash flow positive and hold that asset. And then maybe in the future, while you're still renting in downtown, you can trade that asset and move it into downtown, right? Go own something. That's it, period, right? It's not about like, I need to buy something where I live. Like, if you can't afford it, you need to work your way up the ladder, even if you work your way up the ladder from a different city. Just go and do it. Because if you understand how all this stuff is panning out, I'm pretty sure this is going to happen, right? Now I'm going to go and talk about some of this like kind of inflation stuff. Like, a lot of people hear me like complaining and talking about a lot of inflation and all this stuff, right? And interest rates. But like, you have to understand where I'm coming from on inflation, right? I'm going to talk about like 3 types of inflation that we saw and explain to you how it affects the housing market, right? Because I probably talked about, or not heard about, shortages and different types of inflation, money inflation. Everyone just groups it on inflation. But I'm gonna break it down to 3 types because there's 3 different ways inflation happens. And actually, I'm going to clip to a video of an economist, and I don't want to butcher her name, but like you can watch it here as a little clip, but it talks about how there's 3 types of inflation: cost inflation, demand pull inflation, and then there's the broad money supply increase inflation. And I'll clip it right here.
Traditional economics would dictate that there are 2 main causes for inflation. There is demand pull inflation and cost push inflation.
Cost push inflation happens when business expenses increase, and these extra costs are passed on to their customers.
So with cost push inflation, what happens is that the price of your inputs or your raw materials goes up over time. And that could be because of anticipated events or unanticipated events, like, say, a natural disaster. A good example of that would be, say, what has happened to many of the world's economies coming out of lockdown. And On the back of that, we've seen a lot of supply chain bottlenecks. We've seen a rise in shipping costs. We've seen in certain areas a labor shortage. And because most of those inputs will go into the price of manufacturing, inevitably that has led to higher costs.
Then there is demand pull inflation, which is when the demand for goods and services outpaces supply. This tends to happen when the economy is strong.
Demand pull is probably a better reflection of what happens when the economy is very close to full capacity. In the case of a very well-functioning economy, people may feel that they have more disposable income to spend, and therefore demand for goods and services may go up. And if companies are operating at full capacity, they won't be able to increase their production to keep up with that demand, so that could also be inflationary.
Some economists also see increasing money supply as another major cause of inflation.
Around the 70s, a new type of view came to the forefront, and that was posited by famous economist Milton Friedman. And his view, and he actually said this, is that inflation primarily and everywhere is a monetary phenomenon.
So like if you watch that and you understood that, you can see that like cost push inflation is basically kind of like, oh, you know what, as business, when our costs have gone up, we're going to pass on that thing to the end user, right? So I'll use pre-construction as an example, right? Or even like building a house and renovations, right? If your cost of concrete, your cost of which we know a shortage of, right, has gone up, me as a business and a person, I'm going to make sure I still make the same money I have, but I'm going to pass on those costs to you as the end user. So that's why renovations have gone up. And this is what always happens, right? So another interesting thing is like if the government really, really wanted to increase supply, they would remove all the red tape and make building a condo or renovations or legalizing basements a lot easier rather than put so much red tape and cost associated with it, because those costs are also cost push inflation that gets passed on to the end user, which is ultimately the person buying it, right? So development charges, like if you talk to any developer or like someone I've spoken to, like it takes like 3 years to get this thing up and running because they run all these like, I hate saying this, but like this is dumbass, it's kind of like studies and stuff, and everyone objects, right? So I'm not going to go around on that, but like basically if you remove the red tape, then you remove a lot of the holding kind of cost that gets passed on to the end user. And that's kind of why pre-construction has gone more expensive. I talked about this before in a video, like I stopped selling pre-construction because in 2017, 2018, because overnight, low key in February or something, they doubled the development costs for condos and prices went up like a few $100s a foot. And that was the end result. And that's a form of cost push inflation. But no one talks about it. And they always say, oh, these developers are greedy. I'm not like, taking the side of the builder. It's just like these guys didn't make a margin to actually build. They're taking a lot of risk. But if they can't make their margins, why the hell would they want to build something, right? So it's the government that's taking the opportunity to make even decent money away from them. And until they remove that kind of red tape, they're not going to increase the supply. So if they really wanted to, they would remove the red tape. But the problem is if you ever look into like the ridings in like Rosedale, no one ever wants anything built higher than a certain floor. And you got a lot of people that are lobbying the government to say, hey, don't let this pass, don't let this pass. And when the government or like the member of parliament that's sitting in like the Rosedale area wants to get reelected, they're gonna be like, okay, I gotta listen to this, I gotta nix this project. And that's exactly what happens. That's kind of a form of NIMBYism. They're not letting stuff get built in their backyard, like not in my backyard NIMBYism. And then because the government officials want to get elected, they prevent all this density from happening. So that's why we have a housing supply, plus the prices are going up because of cost push inflation, right? So I hope you understand that. Then I'm going to talk a little bit about the demand pull inflation, which, like we were saying, like if the demand side gets pulled up, then the prices go up as well, right? So let's use the pandemic as an example. The minute kind of the borders in Canada opened up, everyone wanted to travel. So before there was no demand for travel because everyone was locked down and freaked out. But the minute things opened up, everyone to get out. There was a demand pull inflation and everyone to get out. So this is the whole, like there was a shortage of rental cars, right? So like when I went to Hawaii and I was trying to rent a car, like I was talking to locals, they're saying, yeah, the cost of renting a car is now 5 times what it was. There was even an island we couldn't go to because they just had no rental cars to actually give. So that's a demand side pull inflation. And then you got your broad money inflation, right? Which is if you have, again, I always use this example, $10 and 10 apples, each apple is $1. But now if you double the broad money supply and you have $20, then each apple is worth $2. So it's not that the apple has gone up in price, it's just your money has gone down in value, right? So now with those three components of inflation, let me loop it in with what's happening in the pandemic, right? So if the pandemic has cost push inflation to the end supply of the housing, which is concrete, which has been expensive. It's shipped from China a lot of times, and the shipping rates have gone up because the ports are closed and, ship went sideways. So that stuff has gone up, gets passed on to the end user. Lumber supply. We have tons of wood in Canada, but we don't have refineries, right? So we can't turn that timber into usable, buildable wood. So we always have to ship that to US, and then the borders got closed, and that's kind of constrained. And that's kind of how the pandemic has made a lot of cost push inflation passed on to us, right? Then you also have kind of things like copper, which is used in all electrical, and there's going to be a shortage coming through. And you're seeing this a lot with the cars, right? Like, while you want to increase the supply of this kind of raw material, it takes effort to increase the amount that you can produce. So I use the chip shortage as an example. Like, building these chips takes a lot of money and to build these giant facilities. So when you shut off the ability to, or like you take the capacity from building these car chips into something else chips, then you lose that capacity, and it costs what we call CapEx, capital investment, into the creation of it. It takes money and time to create the foundation to make those things. That delays it, and it causes the inflation to continue, which is why when like people like central bankers are saying transitional, I'm like, what the hell is transitory? I'm like, what the hell is transitory, right? Like, it makes it sound like it's going to happen. It's not going to happen. You don't know when it's going to end, right? And I made this relation, like, anyone who watches basketball, it's like anyone who gets an injury is out indefinitely. Are you out 2 weeks, 2 months, or 2 years? Like, who knows, right? But it's just that idea and that hope of it ending. But honestly, if I look at all of this stuff for housing, like wood, like it's come down in price, but like copper will be a shortage because of EV cars. We're still having a shortage of like concrete coming in. I can't see prices coming down because of the cost push inflation. So if the governments still want the builders to build, right, you're going to have to find some kind of trimming around the edges, or prices get passed on to us as the end users, and we accept it, and then they continue building that way so that we get more supply. But otherwise, this cost plus inflation, prices ain't coming down. Pre-construction have never come down as long as I've had my license. I don't think it's coming down any soon with this cost push inflation. Now, from the demand pull inflation, when you have the interest rates at an all-time low, right, which is kind of talking about how like the bond yields are low, people used to build it there, you get 3%, but now you get like 0.5% or 1%, whatever, right? When your interest rate's so low, nobody wants that crap, which is the bond, like junk bonds and all that stuff. So then they move into different assets that actually have better yields, which is real estate right now, or equities, kind of like your growth ones like Tesla and whatever, right? Or even Bitcoin. So when you have more people flocking and having more demand for this type of asset because the interest rates are low and the yield on quote unquote safer assets are low, they're going to flock here, and it's going to drive up the demand. So now you got the cost push inflation making stuff more expensive in the real estate market. Then you got more people chasing the yields, like hedge funds like BlackRock and core developers coming in buying real estate assets. That puts more demand on these properties, and it increases the price. That's another one. Then you mix that with broad money inflation, which is like, obviously we talked about this, I talk about it all the time. They keep increasing the supply of money, right? So if you increase your value, the supply of money by 20%, that means it technically reduces the value of your money by 20%, right? So if you had $10, you increase it to $12, you increase the supply by 20%, now you're down to, you lose 20% on your $10, it's worth $8, right? So that makes the value of prices go up as well, because of like real estate go up as well, because what you could buy is the same, but there's more people chasing the same goods, and there's more money in the system, so therefore it drives it down. I don't think it's a one-to-one correlation, as I think I've shown before. Like, I've changed my kind of stance on that. Just because 20% went up in broad money supply doesn't mean 20% went up in real estate price. I think that's just a coincidence. But like, when you mix this whole cost push inflation, demand pull inflation, and broad money supply inflation, it's going to drive real estate prices up. And until any of those things get fixed, any of them, I don't see prices coming down. And that's why I'm going to double down. And I think the government's going to try to trim around the edges. And at some point, we're going to have all those amortization increases so people can buy. And then we're going to rent cap rental. I think that's where we're heading, right? But until you fix the cost push inflation, which hopefully maybe it'll be over in a couple of years when kind of like the foundries, like the chip suppliers and the ports are all open back up, we can reduce the cost push inflation a little bit. When it comes to demand pull, if they increase interest rates, then maybe they can reduce that. But that's a whole different topic because I think it's going to blow up the economy. And then when they stop printing money, then we can see prices slow down, not decrease, slow down. So I can't see any of those things happening because it's going to be at least a few years before kind of the foundations, all that stuff is back up and the pandemic is over and the supply chains are fixed. So it's going to stay there for a couple of years. The demand pull, until interest rates actually go up and people stop chasing higher, riskier yields, I don't think the demand for housing is going to go down, and I don't think interest rates are going to go up. And people have been saying this since '08, but I don't think so. Like it may go up like a 0.25, like 25 bips or 50 bips in there, but it's not going to go up 3% because it's going to blow up the economy. So anyone who owns real estate and is concerned about mortgage rates taking a variable because it's cheaper right now, then you're crazy, because I don't think they're increase it, because if they only focus on real estate like you are thinking about it right now, then that means the whole economy blows up, right? And the ironic thing is actually here, like I think here in this article dated September 9th, Tiff Macklem, the head of the Bank of Canada, is saying that, hey, we're planning to raise interest rates. Again, they say all the time, but the minute, I think the week later, I have it here, I think last week or something, all except for one major bank reduced all their mortgage interest rates. So some went from 2.2 to like 2.1, some reduced their variable rates and reduced the fixed rate. So you have to remember, just because interest rates change from the Bank of Canada doesn't mean that banks change the rates in Canada, right? So like we see this all the time, and I'm actually quite surprised that the banks are dropping their rates some more. So I have a client who just got a mortgage on their primary residence for 1.15 5-year variable 30-year term. It's just silly, right? So money is free, and that's kind of why, again, I'm also doubling down on real estate. And then unless they're going to stop fixing the broad money supply inflation, which is like printing more money, they're not going to reduce the price of it. And if you think about, the government things that they said they're going to do about the housing, which I have here, like if you're going to put $4 billion into circulation for housing, right? I think Canada's at almost $1 trillion in debt now. You're increasing the money supply by 5%. And they're promising all these things. They're handing out money, helicopter money. If they're going to continue doing that to pander boats and get all this stuff, there's no way housing prices are going to come down. The unfortunate thing is what I keep saying to a lot of people is like, while they're going to get the money, like the people who need it are going to get money, I think it's absolutely great. They don't realize the detrimental effects of what happens to the economy. Because like if you give the person who can't afford a house like a CERB check, right, a $2,000 check, that's fantastic. But if you open the liquidity to the banks and credit to people who don't need the CERB check, who cares if they get $2,000? But like they're able to access that money for cheaper, like investors, and you can buy stuff, you can buy more properties. It's going to drive prices up, and it's going to make that gap bigger because you've short-term put a Band-Aid on the fix for people who absolutely need the money, which is great. But then now you've made a long-term effect of reducing the rates and making people chase more stuff, and they can borrow more stuff and buy more stuff for those who can have access to credit. So this means the people who make more money get ahead for that reason, because the money system is messed up and rigged. Then people who don't make money, they get a cool check, stimulus check, CERB check, whatever, but they can't access that credit to buy more assets and get ahead. And that's how the wealth inequality keeps growing bigger and bigger. And unfortunately, I think the government keeps pandering to that effect because it helps them stay in power. Right. So that's kind of like my whole conclusion on, or not like my thesis of what's happening and why I'm like doubling down on real estate. And I keep saying this because like the more I look at all the stuff that's happening, I've had time to think when I was away for a little bit. I'm like, the more I look at this stuff, I'm like, the more ridiculous it is. Like the context of what money actually is, it keeps being lost on me because I'm like looking at this stuff. I'm like, look, it all makes sense. All of this theory, I'm like, there's no way they can fix all this stuff. I'm like, I can't see it all happening, right? And like put the whole picture together. Like this is the game that the government have put on us, right? Like it's don't hate the game, don't hate the player, hate the game, right? And I want to show you how the game is being played so you know the rules and win, right? Because like I personally don't think any politicians do anything right. And I say that in the nicest way possible because while I think they have the best of intentions, you have to understand that their underlying motive is to get reelected. And you want to pander to people who have the most voting power, like the biggest demographic. So while they are optically doing the right thing, at the back end, I think it causes a lot of issues. And for them to do the right thing really would have been just like nix the red tape, increase interest rates while they can during the pandemic, and then not bail everybody out. But they did the exact opposite. So for me to think that they're going to actually do anything to fix the affordability crisis in housing in Canada, it's like zero. Like it's zero until someone actually does it. It's all talk, and even all of this talk, if I break it down, it's just trimming around the edges. It's not getting to the root cause of all of it. That's why I keep saying, don't hate the player, hate the game. Understand how the game is played. And until they stop money printing, maybe they fix the panic, cost push the inflation, the demand pull inflation, the value of assets aren't going to go down. That's it. That's kind of it, right? And like I can't see how the value of money even comes down a little bit because they have to continue printing. Like if you look at the global reserve asset, which is like the US dollar, like even Biden is printing at $6 trillion, right? Like I think they have a deficit of like 30 trillion. They're printing 6 trillion, 30 divided by 6 is 5. That means they're adding another 20% worth of value to the economy, so the global economy, right? And because a lot of currencies are back non-US dollars, they use the US dollar as like a central reserve because like, you know, their currency has inflated away, like Zimbabwe, Venezuela, then their stuff is going to get inflated away too. So that's why I can't trust the value of what a dollar is. I'd rather have an asset, whether that be real estate, stocks, Bitcoin, art, Pokemon cards, right? Anything that holds its value that has scarcity, right? You have to understand that. And until we fix the supply issue, which is a scarcity issue, right? Is what I'm trying to get at, you're not going to fix the the housing crisis. And that's kind of it, right? So at the end of the day, inflation that's happening, whatever pace is going, it's good to borrow to buy assets because you're paying it back with future money that's worth less. And that's kind of the name of the game right now and why you need to understand this. Like, look, you don't have to copy my strategy and do all of this. It's just, this is what my thesis has always been. And I'm sharing with you because a lot of people ask me kind of about what's happening with, you know, the election and all the stuff that's coming down. And this is kind of my thought summarized into what is, holy crap, 50 minutes of me talking to myself in my office, right? So again, don't take everything I have verbatim. You don't have to believe it. Do your own due diligence. This is not any financial advice. This is just how I've been operating. And I'm just kind of increasing my operations in this manner because I don't see anything slowing this down. If anything, I see everything speeding this up. So that's kind of my scary kind of world-ending kind of thing, right? And I'll touch on one last thing, which is the Evergrande stuff in China. Like, again, I don't know too much about it, but I've just been kind of looking, reading news and thinking for myself. Like, basically, it's a publicly traded company that owes too much money. They borrowed too much. They kind of went to different banks to try to finance and service their need. And now no one's lending them any money. And they keep trying to sell their product for less to get more money so that they can continue operating. But no one's buying their stuff. It's causing prices to come down. And a lot of people are using the word contagion as in like it's a credit contagion, kind of like Lehman Brothers in 2008, that's going to spread everywhere into US and Canada global asset. So here's my take on it, okay? I will use Canada as an example of the builder situation. Let's say you group Menkes, Tridel, Lanterra, I'm just naming builders that are really big right now, right? Green Park, and they're all publicly traded. If they collapse as a company, we just get less houses. It doesn't mean things are going to blow up per se. While it can, if people have exposure to their money and they blow up, right, and people lose their money and may cause a cascading effect, hence contagion, I don't think that even if it were to blow up, which I think the CCP is going to bail them out at some point, I don't think it's going to affect the market too much. Like the worst case scenario is maybe I'm wrong and there is a contagion and it wipes out everything and it causes another financial crisis and everyone blows up. I personally am not concerned, right? Because my portfolio in real estate, it's self-liquidating, my tenants pay for it. And as long as they need roofs over their head, and we saw this with the pandemic, we all freaked out that they weren't going to pay rent and move out, but everyone needed a roof over their head. I am not too concerned about that as long as I have tenants, right? This is why cash flow positive is important. But if you're cash flow negative, oh boy, right? So I don't think it's going to happen that, but let's just say that's the worst case. And some people are telling me that maybe they're thinking that there's going to be a lot of money flocked over to, say, out of China because everyone was buying real estate because it was going up 10% in the last 8 years or so or something like that. That's what my family was telling me. And they're going to move their money elsewhere. So my thought of that is like, their money that they invested into Evergrande is stuck there. They may lose confidence in continuing to buy Evergrande properties in pre-construction because that's really popular in China. But that doesn't necessarily mean there's going to be a flight to Canada. Ultimately, I think instead of the two extremes where a contagion will happen or there's a lot of money coming to different foreign countries, I actually think we're going to be right in the middle. It's going to be neutral because when US, which was a global reserve currency, was kind of blowing up, it kind of minorly affected all of Canada. Like it dropped like 3 or 4%, which is very, very little compared to what they dropped, which is 30%. But if you looked at Golden Horseshoe, Ontario, it actually went up 0.1%. So I think the US is outside of this whole China thing quite a lot. It's not going to affect the US market. And I'm definitely sure Canada doesn't have exposure to Evergrande, and we're not into that market. If anything, it's just what they're going to do with their money and what's going to happen. So as they say, it's a nothing burger. I wouldn't be too concerned about it. I'm going to watch it, but I don't think anyone should be overly concerned. So that's kind of a wrap of what the liberal policies are and how all this inflation is. And I look back and I look front of kind of like what all the moving pieces are and why I honestly think buying real estate or any asset makes sense. And again, get into the market, get on the real estate ladder, and just make sure that your money is safe from inflation, because it ain't stopping. It ain't stopping, right? So if all of this kind of makes sense to you and you're like, oh my God, Zen, you open my eye, you're crazy, but I kind of believe you all kind of makes sense, and you want to chat with me about how to make a move in real estate market, you can book a call with me using the link here, which is www.chatzen.com. If you just want to chat about this, I always love chatting about this. You can also just make a call to me. I'll earmark a little bit of time and we can chat about it as well. For anything else, if you guys don't agree with me, you can leave in the comment section. I'm more than happy to have a very friendly debate on the comment section below on YouTube, because it's just interesting to see how people perceive what on earth is happening, right? So hopefully you found this very helpful. And again, if you need to make a real estate move, www.chatzen.com. But if you don't, it's cool. I hope you enjoyed this. Until next time, your move, your future. See ya.